Hi boys, welcome back to episode 8 of Bootcamp. Today we're going to be talking about the Confluence turtle soup. Now this is one of the weirdest terminologies inside of trading, but it can be pretty useful. So to understand turtle soup, we have to pair it with the current trend. So for example, if we were bearish, turtle soup is essentially just a liquidity sweep, taking out buy-side liquidity or a drawn liquidity for price to continue going bearish. And if we were bullish, making higher highs and higher lows, turtle soup would just be taking out sell-side liquidity or taking out a low to then continue in the original trending direction. It can also work like power of three. So if we're trending bullish, for example, going higher, and then we start to consolidate, we then know if we take out sell-side liquidity and knowing that the trend is bullish, that we can take a long following the trend, calling that turtle soup. So if we look at some real-time examples, we can see on GBP USD that we have been making lower lows, lower highs, lower lows, lower highs. So if we were to zoom in and look at this current price action range, the first thing we would realize is that sell-side liquidity is here and buy-side liquidity is up here. And because we know that recently we have been bearish and we want to follow the trend, we're going to look for a liquidity sweep of some sort of high, either buy-side liquidity or this high, for then us to continue lower and target sell-side liquidity. So essentially, turtle soup is just another fancy name for saying a liquidity sweep, but it usually follows the current trend that we're in. So if we play price forward, so after we see price take out this high and continue lower, we could look for an entry inside of any of these 5-minute fair value gaps right here or here. See if price retraces, price comes back up, it inverses this fair value gap. So I would say this one could be a good entry, but if you were feeling more risky, you could take this, but in my opinion, it's not as good. We then place price higher, play, bang. And then we tap into this 5-minute fair value gap after we took out turtle soup. I would say you could put your stop loss at the top of the 5-minute, or to be safe, put it at the top of this high. Target sell side liquidity, and then as we can see, it hits very nicely. Okay, if we look at this price range again, once again we can see that we are bearish. So what are we going to look for? We're going to look for a liquidity sweep of either this high or one of these highs for us to then continue following the trend and take a short down to sell side liquidity down here. So we want to see price take out these highs, bang. We call this either, you can call it buy side liquidity, call it turtle soup, whatever. We see liquidity is being taken out. We now want to see price continue to the downside. So we wait for some confirmation, bang. Right here we see we break structure to the downside on the 5-minute, past this low. And then price gives us a 5-minute fair value gap to take an entry on. You press short as soon as it comes in the fair value gap, stop loss at the top of this fair value gap or at this high. Usually it's better to give your trade more space to run if you're a beginner, because then it gives your trade a higher probability of hitting because it has more opportunity to move around. But yeah, let's see what happens. And as we can see, price retests that 5-minute fair value gap and then it dumps very heavily, targeting sell side liquidity. Okay, here we go. We can see right here that we were bullish, right? Making higher highs, higher lows, higher high, higher low, right? And we take out this low right here, creating turtle soup. And then as soon as we push past this bearish 5-minute or tap into this bullish 5-minute, we can take a long. Honestly, the target isn't that great because the low-hanging fruit, the easy target would be this high. So it's a bit of a negative risk to reward unless we put our stop loss, for example, at the bottom of the 5-minute or at a 2 risk to reward. We could be targeting all of this liquidity, which did happen. But yeah, that is the but yeah, that's another example of soup. I'll try to find a cleaner example for you guys. All right, we're also going to talk about inducement. So inducement is the last liquidity sweep before a trend reversal. So if we look at price right here, we can see that it is very bearish. We are making lower lows, lower highs. When we come down here and we sweep liquidity one final time so that banks can get their best fills, get their best orders, buy at the lowest points, and then we see price break structure to the upside, we know that this is an inducement or an internal final liquidity sweep for the banks to fill their orders before the market reverses. So that's inducement, and then it's sort of like confirmation that the trend might reverse, because usually banks do that before it reverses, but it's good to find, these liquidity sweeps are good to find a reversal point. Okay, all throughout here we can see that we have been like kind of choppy, but it's been bullish chop, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, blah, 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 all that stuff. So if we look at this price range right here, what do we say? Obviously, we want to target buy-side liquidity because we are bullish. So this is our draw on liquidity, and then we want to see one of these lows get taken for our turtle soup. So price comes down, takes out this low soup. We can also see that there's a little bit of inducement right here, and then we break structure to the upside right here, and then it's pretty clear. You can either take this inverse bearish 5-minute, which would give you an insane risk reward, but if you wanted to be safer, I would say you could take this one, and that's more high probability. Press long, stop loss here, and yeah, target up here. Usually, I'm not gonna lie, I'm not gonna say I target buy side liquidity all the time. I would usually, like, I don't know, take a partial here or go for a 1-to-1. But yeah, let's see how this plays out. So what happens? Price plays around for a little bit. This is what I call sort of like high liquidity, right? There's going to be people that are being chopped up in here because we're sweeping this low. We're sweeping, like, all these lows are being liquidity swept, all these highs are being liquidity swept. So it's just stopping out people who are like buying and selling right here, filling their orders, and then bang, we can see it smashes, I'll take profit. So those are a few examples of turtle soup. If you guys found some value, make sure to, I don't even know, just hopefully you guys found some value, and yeah, I'll see you guys later. Peace out.